Hey everyone, and welcome back to the channel. Today, we're diving deep into a company you might not talk about every day, but it's absolutely critical to our tech-driven world. Taiwan Semiconductor Manufacturing Company, or TSMC, ticker symbol TSMC. Visual aid, TSMC logo, stock ticker TSMC, headline. TSMC, the brains behind your tech. TSMC isn't just another tech company, it's what we call the Sovereign Forge, the place where the most advanced chips for pretty much everything are made. In 2026, with AI exploding and global tech heating up, TSMC has become a massive player, not just a supplier. Let's break down why this company is so important and what it means for investors. Section 1. What exactly does TSMC do? The pure-play powerhouse, visual aid, animated graphics showing chips being made text. Pure-play foundry model. Imagine all the incredible tech companies out there. Apple, Nvidia, AMD, Qualcomm. They design amazing chips, but they don't actually make them. That's where TSMC comes in. They pioneered something called the pure-play foundry model. This means TSMC only manufactures chips for other companies. They never design their own products. Visual aid. Logos of Apple, Nvidia, AMD, Qualcomm next to TSMC logo, with an arrow pointing from TSMC to them. This neutrality is their superpower. It builds incredible trust with their customers, because TSMC is never competing with them. While rivals like Samsung and Intel also make chips, they also design their own products, creating a conflict of interest. TSMC, on the other hand, is the trusted, dedicated factory for nearly all advanced AI and smartphone processors globally. Visual aid, text. Foundry 2.0, beyond just chips. They've also evolved beyond just making wafers. It's now Foundry 2.0, meaning they handle advanced packaging, testing, and mask making. This is crucial because, as chips get smaller, it's not just about shrinking transistors anymore. It's about stacking different chips in 3D structures, which TSMC does with technologies like CoWoS. This advanced packaging is now a high-margin, critical bottleneck for the entire AI industry. Section 2. Why TSMC dominates. The virtuous cycle, visual aid, graphics showing a cycle, high demand scale R&D yield cost advantage high demand. TSMC's dominance comes from a virtuous cycle. They grab most of the global demand for advanced chips. This huge volume lets them spread their massive R&D and factory costs across more chips than anyone else. More volume means they learn faster, refine processes, and achieve high yields, meaning more functional chips per wafer, months, even years, ahead of competitors. This yield advantage means they can offer more cost-effective solutions to customers while keeping fantastic margins for themselves. Section 3. TSMC's money-making machine, financials 2021 to 2025, visual aid. Line graph of TSMC revenue and net income 2021 to 2025, highlighting the dip in 2023 and the surge in 2024 to 2025. Let's talk numbers. The last 5 years have been a roller coaster for the chip industry, but for TSMC, it's mostly been an upward climb driven by the AI gigacycle. After a dip in 2023 due to a post-pandemic slowdown, TSMC absolutely soared in 2024 and 2025, hitting record sales and profits. Visual aid, table. TSMC financials, US dollars billions. Year. Revenue, net income, 2021, $57.0 billion, $21.5 billion, 2022, $81.7 billion, $36.7 billion, 2023, $77.8 billion, $30.2 billion, 2024, $104.2 billion, $42.3 billion. 2025, $122.4 billion, $55.0 billion. Note: translated from NT dollar to approximate US dollars for easier understanding, in 2025, their revenue hit a staggering $122.42 billion, up over 35% from the year before. This growth isn't just about phones anymore. It's driven by cloud giants like Microsoft, Amazon, and Meta pouring billions into AI infrastructure. Advanced technologies, like their 3-nanometer, N3, and 5-nanometer, N5, nodes, are now powering 74% of their wafer revenue, showing their shift to high-end, high-margin chips. Section 4. The Dividend Story. Balancing Growth and Returns, Visual Aid, Text. TSMC dividend, consistent but low yield. For income-focused investors, TSMC has been consistent. They've paid dividends for 22 consecutive years, and they aim to never decrease the annual payout. However, don't expect a huge yield. With the stock price nearly doubling last year, the current dividend yield is around 1%. Visual Aid, Text. Why the low yield? Massive investment. Why so low? Because TSMC is reinvesting heavily back into the company. They're planning to spend between $52 billion and $56 billion in 2026 alone on capital expenditure. This massive investment is crucial to maintaining their technological lead in cutting-edge 2 nanometers and A16 production, creating a huge barrier for any competitor. So, it's a trade-off: lower current yield for incredible future growth potential. Section 5. Unrivaled Dominance, the Foundry Landscape, Visual Aid, Pie Chart. Global Pure Play Foundry Market Share 2025. TSMC 70%, Samsung 7%, others 23%. TSMC's lead in advanced chip manufacturing is pretty much undisputed. In 2025, they held about 70% of the entire global pure play foundry market. But in the most advanced segments, chips smaller than 7 nanometers, they control over 90%. Visual Aid, Comparison Table, TSMC versus Samsung versus Intel, Market Share, Yield Issues. While Samsung and Intel are trying to catch up, they're really struggling. Samsung's market share is slipping due to yield issues on their latest processes. Intel, despite huge investments, is still losing billions in its foundry division. TSMC's dominance is further locked in because designing chips for their advanced nodes takes years of collaboration, making it incredibly expensive and difficult for customers to switch foundries. Section 6. Profitability Powerhouse, Margins that Astound, Visual Aid, Bar Chart comparing operating margin, net profit margin, ROE for TSMC, Samsung, Intel, 2025. TSMC's profitability is frankly incredible for a manufacturing company. In late 2025, they reported an operating margin of 54% and a net profit margin of 48.3%. To put that in perspective, most big manufacturing firms operate at 5 to 15% margins. Their return on equity, ROE, soared to over 35% in 2025, more than double Samsung's, showing how effectively they turn shareholder capital into high-margin earnings. This is thanks to their superior technology, scale, and the high demand for their advanced AI products. Section 7. The Future is Angstrom, Growth Drivers, Visual Aid, Graphic showing a shrinking chip, text. Angstrom era, 2 nanometers, A16 CoWoS. TSMC is not resting on its laurels. They're moving into the Angstrom era, where precision is measured in fractions of a nanometer. 1, 2 nanometers, N2, node, high-volume production started in early 2026, offering 10 to 15% speed increases, or 25 to 30% power reduction over previous generations. TSMC has a significant yield advantage here, meaning they'll be first to market with chips for devices like Apple's next-gen processors. 2. i16 1.6 nanometers node. Coming in late 2026, this will feature Superpower Rail technology, which moves power delivery to the back of the wafer for denser, more efficient AI chips. NVIDIA is already on board for their future architectures. 3. CoWoS expansion. Their advanced packaging, CoWoS, is essential for AI accelerators like NVIDIA's powerful GPUs. TSMC is massively expanding its CoWoS capacity, ensuring they remain the sole enabler for these critical components, giving them even more pricing power. Section 8. Risks to consider: the Silicon Shield and beyond. Visual aid. Map of Taiwan, Arizona, Japan, Germany, highlighting Taiwan with a shield icon. Text. Geopolitical risk. Taiwan Strait. Despite its strength, TSMC faces significant risks. 1. Geopolitical risk. The biggest concern is the tension in the Taiwan Strait. Most of TSMC's advanced manufacturing is in Taiwan, so any conflict there would cripple the global tech supply. This, Taiwan risk, is why the stock often trades at a discount compared to U.S. peers. 2. Overseas expansion costs. TSMC is building new megafabs in places like Arizona, Japan, and Germany to mitigate risk. But these are significantly more expensive to build and operate. For example, U.S. costs are double Taiwan's, which could dilute TSMC's famously high gross margins by 2 to 3 percentage points. 3. Supply chain fragility. They rely on single suppliers for critical equipment, like ASML for EUV machines. Any disruption there, or further trade restrictions, could impact production. Plus, there's a global talent shortage that's intensified by staffing these new facilities. Section 9. Investment takeaways. Growth versus value. Visual aid. Split screen with growth investor on one side, rocket icon, and value investor on the other, piggy bank icon. So, how should you view TSMC as an investment? It's a fascinating paradox that appeals to both growth and value investors. For growth investors, visual aid, text. Growth thesis. The AI infrastructure pure play. TSMC is the ultimate picks and shovels play for the AI era. With analysts projecting 40% earnings growth in 2026, driven by CoWoS and 2 nanometers demand, the AI build-out is a fundamental restructuring of computing. Price targets suggest a significant upside from current levels. For value investors, visual aid, text. Value thesis. World-class monopoly at a discount. Despite its incredible growth catalysts, TSMC trades at a forward PE ratio that's often lower than many US-based AI hardware firms. This difference is the geopolitical discount, the price you pay for owning the world's most critical technology asset, acknowledging the Taiwan risk. Visual aid, final slide, TSMC logo. Keystone of the digital future. Key takeaways. Unrivaled tech moat. AI-driven growth. Manage geopolitical risk. In conclusion, TSMC enters 2026 as an absolute powerhouse, shattering financial records and proving its high-margin model can thrive even amidst massive expansion and global uncertainties. While the costs of global diversification and geopolitical risks are real, TSMC's technological moat, particularly in advanced transistors and packaging, remains unbreachable. It's a company with the financial stability of a utility, yet the growth trajectory of a cutting-edge startup. TSMC isn't just making chips, it's enabling the entire digital future, making it a cornerstone asset for serious investors in 2026. What do you think about TSMC? Let us know in the comments below. Don't forget to like this video and subscribe for more insights. See you next time.